Hello, good morning, guys. How are you doing? I hope you've had an exciting day, and I'm confident that your week is going on a very good note. Welcome to episode 56 of our FOREX LIGHT sessions, and it promises to be another valuable one because, as usual, I'll be dropping some good value, value. That's the essence. Value that's gonna help us make some money from the forex market. So, without further ado, I will be going straight onto the chat. I'll be going straight onto the chat. Now, I was taught a very nice lesson today. I learned out something very nice today, and I'm going to share with you guys because that's the essence. That's the essence of these sessions at this time. It's not about just me alone, but you guys are a big part of what I'm doing right now. So, can you guys see this trade? I created the setup previously, the previous day. That was on Monday. I, I had it set up. Price was around there at that time, I think around there, thereabouts. So the price came down. Okay, I think it was around there. Anyway, the price came down, hit my entry, and then went into profit. TP1 was cleared. TP2, right now it's almost there, and you know, yeah, it would be a good time to exit this trade because we've had two rejections at this area, so it may not get to the TP2. Anyway, it's close to it, and regardless, so I'm not sure missing out on too much if I exit this trade at this time. But guess what, guys? Even though I entered these three parameters on my MT4, the trade was not triggered on my account. It was not triggered. Now this is what happened. I started trading gold. Uh, it's been a week now or two. Like let's say it's been 2 weeks now that I started trading. That I've been trading gold, and still quite. I'm still getting good familiarity with the gold pair. So one thing that I because of the way gold prices are quoted, we have two or three decimal places, and the numbers are basically close to each other. For example, this is 19. We have this line. This is 1960. Just a little bit above it, we have 1961. So basically, I don't take the decimal place seriously. So what I did was that this is my entry. My entry price was 1949.28. So what I do, I don't take this decimal place. I just take 1949. So that was what happened. My entry price was 1949 instead of 1949.28. Now let's see what the market did at that point. I'm gonna zoom in. Now this is my entry price. So the market basically hit my entry price and went back up. It didn't really go deep into it. And let's see the price that it's got it 19. Okay, this 1948.9. Now this is 1949. So 1949 will be around. Okay, good. This is 19. Okay, good. This is 1949. So this was the price that I entered on my platform. Now remember that we also have what is called spread. So the price that your trade will be triggered will be a few pips, about 1 or 2 pips ahead of your entry price. So meaning this trade will be triggered at 148.8, which is around here. 148.8. This is where the trade will be triggered. That means the price had to come to this level before my trade will get triggered because of spread. But as you can see, the price did not get to that point, so my trade was not triggered because of that spread. But assuming I kept my entry at the value that I analyzed, 149.28, then my trade will have been triggered. That's 2 pips below that, which is going to be 149.0. it. And as you can see, that the price got there, and I will have been able to join that ride and made some money for myself. But as you can see, I learned a valuable lesson there, that I should not underestimate the value of 1 pip, or the value of 2 pip. It can literally mess up, it can literally mess up your trade. Let's see another example of the value of one pips, the value of 2 pips. Now look at this. Let's see how many pips that the trade missed our take profit point. Okay, good. So basically, just about 4 pips, 46, 4.6 pips. You know, the trade went as high as 4.6 pips before it gets to our take profit point. So the point is that you don't want to underestimate the value of these decimal places. I've learned that from this trade, and going forward, I'm going to respectfully put decimal places as analyzed. Because I was a bit what would wasn't too comfortable, but in reality, that will be termed as sloppy trading, and I don't want to be a sloppy trader. I want to be a serious trader. So I have to be disciplined in everything, including how I take my entries. So that's the lesson. Depending on others are on my chart, my MT4, and I'm going to delete them right now so that the trade already moved. The trade already moved. It already played its part. It's already gone through its journey. So there's no point me keeping it. Okay. So that's one thing that I hope you guys learn from as well. Don't make the mistake that I make to underestimate decimal place, and because of that, miss out on some profits, or miss out on the old trade entirely. You know. So that is a key one, and I'm glad I'm learning these things now on my demo account, because I'm actually still trading demo account. This is a new pair that I'm working with, so I don't just jump into it on my live account. I need to validate my strategy on this pair. I need to validate my ability with this pair. I need to triple my demo account with this pair before I start trading it on my live account. Of course, meanwhile, I'm trading other things on my live account, not this particular pair. So this just applies to this gold pair right now. So moving on to what we have for today, I think this analysis has played its part. I can safely delete it. It has played its part. I think I can safely delete it. So this was my entry zone that I analyzed for that trade. That's played its part. That's played its role as well. Same thing for this as well. That's already played. I think that's already played its role. So I'm going to delete it. Let me have a clearer chat. Okay. When it's time to use the game, I'll know what to do. Okay. So that's that about that. So let's see what we have again. Let's try and get another entry for this trade, because it has basically gone through that journey, and let's look out for the possibility of another journey, of another move for this trade. Okay, so right now we are seeing, okay, this we're seeing something like we're seeing a lot of things, but basically on the 4 hour time frame, this market is ranging. You can see it's moving in a particular area between here and here. It has not broken this area. This impulse movement is still within the range of this impulse movement. Up, down, up, down, up. So I expect this price to go up to this upper limit before it takes a new decision on what to do, whether to come down or break it. So that's what I'm looking out for. I'm looking out for this price to continue all the way to this resistance up here. And that was more or less my TP3 for that trade. But I didn't even get TP1, not talk of TP3. But I'm glad that my analysis was accurate. And it was sniper entry. That's what my coach calls it. Sniper entry. The entries where you get the exact point where the price is going to move. That is the most beautiful kind of entries. Honestly, that is the entries that gives you joy in forex, where you can determine exactly where the price is going to move. And I'm really grateful to Jehovah for the privilege and the opportunity to be connected to an environment that taught me that. You know, it's really really good because many a times, yes, we have idea of when the price will move or where it will move from, but to get the exact price, it's not very easy to do. It's not very easy to do. So having the skill to be able to determine exactly when that is going to happen, and it's in advance. That's another thing. Most traders trade only after or take trades only after they've confirmed the movement. They don't predict too much. They predict, but they wait for the market to confirm the direction before they join the trade. But being able to determine beforehand when it's going to move and where it's going to go to, and you can set your pending order with confidence. That is, for me, that is a beautiful thing in forex for me, and that aligns with my idea, and I like that type of trading. I want to be able to set my orders and go ahead to do other things. Go ahead to impact other people in other areas. So that's a really beautiful thing that I saw right there. I'm glad that my analysis worked out and it played out beautifully. It played out beautifully. So let's see what we have. Let's so like I said, I've mentioned what I expect to happen, but of course I'm not going to just relax on that. I was still need to, as you can see, the market has halted to an extent in this area. So I'm looking out for a retracement. I'm looking out for a retracement. So let's what we're looking out for now. What we're looking for now is if it, what point is going to retrace to, if at all it decides to retrace. Where is it going to retrace to? And I'll use the opportunity now. I've not yet confirmed if it's going to retrace at this point. As you can see, it is still ranging in this area. It is still consolidating in this area. If it starts coming down, then that means it's retracing. But if it continues up, that means it still has a bit of journey to go before it commences the retracement. But let's do our analysis. I want to show you guys how what I would do if it's a retracement. In fact, let me just set it, and based on what happens between now and the next few hours, we'll know what to do on this. So I've marked up my Fibonacci entry levels, my Fibonacci entry zones between the 50% and the 88.6%. Then the next thing I go to the next lower time frame, 15 minutes, to identify the other blocks in this zone. If you need more info on other blocks, feel free to feel free to research that, and you will get more info on other blocks. Other blocks is yes, it's a powerful part of forex, and it's a very very vital thing that you should be aware of. So take your time and do your research on other blocks, what they are, and how to identify them. Simply put, there are areas in the market where large orders are placed. There are areas in the market where large orders, large, you know, where the market makers, where they place their large orders in the market. And when the price gets there, the orders are triggered, and and they move the market basically. Basically, they move the market. So, and the easiest way to know them is you see an engulfing candle that moves the market, an engulfing candle that moves the market. This one, just an engulfing candle, and the market moved some distance starting from this point. Similarly, this area as well is also an engulfing candle, and the market moved some distance. The reason why I didn't take this is because it's basically just at the end of my zone. Okay, I can take it as well. I think I can take it because to an extent it is still making contact with my zone, with my entry zone, so I can take it. So I have three three other blocks. I've gotten three other blocks. This one will have been a nice one, but it's not really an engulfing candle. That is why I'm not going to take it as an order block. It is not an engulfing candle. This is an engulfing candle, but the market did not move after it. The market did not advance. It got stuck here. So this engulfing candle did not move the market. That is why I'm not taking it as an order block. So that is one way you can identify which is an order block and which is not an order block. So I think I'm okay with the three that we've gotten. So let's clear the large zone and see the okay good. So this is what we are looking out. So I'll be looking out for if now as it's ranging in this area. As a matter of fact, I can actually do a trade. I can actually do I can actually do a trade on this one. So if market breaks out to the low to the downside, then it is a retracement, and I can take a sell order up to at least this area, 50%. I can take a sell order up to this area. But if it breaks to the upside, then I'm not sure how far it will go. So if I thought I'm going to enter this trade, it will be a very short buy. If I thought I'm going to enter the trade, it's going to be a short buy. But I expect a retracement at this point. But it has moved. It has broken some structures. So, and this is also a zone. This is also this area. You can see this blue background. It's also a zone. So the market should respect the zone to an extent before it builds momentum to break it. I expect it to come, build up, clear out this area is also a liquidity zone. You can see the wicks in this area. Or should I say I will consider this a liquidity zone. So I expect the market to come and pack up the liquidity that we have in here before moving. All right. And in the spirit of that liquidity, I'm gonna be setting my pending my order above this zone, which is the ones that I identified as the zone where the market will move. And also it aligns with this liquidity. So I think I have some good confirmation. I have a good reason to take set my order at this point. Then my stop loss. This is the safe stop loss, but it's too large, it's too wide, and I don't want that. It's too wide. It's too wide. I like a tighter stop loss. It's it's it shows a better entry for me. And if it gets taken out, fine, I'm okay with that. But with a tighter stop loss, that means a lower risk. With a larger stop loss, that means a bigger risk. So for me, I'm okay with this tight stop loss. If it gets taken out, then I move on to expect to work with this next zone. I'll take a new entry on this next zone if this one gets taken out. So I'm looking out for this happening, and then my TP1 will be this. This is going to be my TP1, 1 to 5.7 risk reward ratio, which is very good. And TP2 can go above that. So that's what I'm looking out for, guys. And that'll be our time for today. Thank you for joining this session. I hope you got some value. And I've had fun. And I'm sure you've also had fun as well. All right. Hope to see you tomorrow on the session. You know how we do it. It's every day we make money for ourselves. Every day we get better, get stronger, and we gain more confidence. That'll be all for my time today. See you tomorrow. Have a good night. Take care.